Hey guys, hopefully everyone is doing well. Today's target is to solve question number 10. The chapter which we are related with is accounting ratios, and we will be following two different methods, but for first method this is our last question. And second method is reversal method. We may or we may not be doing right now. So it means this question number 10 is your last question for this semester. Beside this, you can see that answer of question number 10 are already available. These answers were not written in your book. So these were shared just for your help. So guys, in this way, we will complete our question number 10. But note it down, there are few things very important. Please underline return on shareholder fund first, then you have interest coverage ratio second, then you have capital gearing ratio. This is number 3. So please understand these are very important for your examination point of view. You will keep it in your mind how to calculate it. That is why I can say that 10th question is literally important question for your paper patterns. Now, after this brief introduction, we are ready to start our question. Look, the second most important thing is we are asked to calculate ratios regarding profitability, solvency, sales, and capital structure. And here you can see profitability, solvency, short and long term sales, after which we will see our capital structure. Ratio, you will have to memorize how many ratios are present in profitability, how many ratios are present in solvency for short term, how many ratios are present in solvency long term. So these names may or may not be given in your paper, so you will memorize them. Let's say in your question it has been said solvency short term. So current and liquid ratio you are required to be calculated. These ratios would not be given. You will automatically be understanding it that we are required to calculate these ratios. Now last introductory point of view, this return on capital employed ratio is not part of your course outline. So for the time being, we are not solving it, but yes, if someone of you wants to calculate this one as well, we will solve it uh, in our next lecture. So we are starting from here, return on shareholder fund. This is our first formula, return on shareholder fund. Alright guys, this is our first formula and I am sure that you remember the answer of this formula, return on shareholder fund. For that we need to have net profit after tax and interest. Profit after tax and interest, and then you need to divide it with shareholder fund. So this is the formula for return on shareholder fund. Let's put a divisor in between these two factors. First step is to calculate net profit after tax and interest. This is very interesting. You can see that, read it, profit for the year after normal running and cost of depreciation. That means on left side you can see interest, director remuneration and tax. Please underline these three items: interest, remuneration and tax. Remuneration means salary. Please write down somewhere remunerations, salaries. It means what do you need is, this is your profit which is before interest and tax. You need to subtract these three items: interest, remuneration and tax. This will become profit after tax and after interest. Now again I'm telling you, this was the profit where interest was not charged, taxation was not charged, salaries were not charged, and your formula is saying to have a net profit after tax and interest. Here I'm going to solve. Look, this was your profit, 9,000. At this stage, you haven't charged your interest, which is 480. Just write down 480. Then you haven't charged your salaries, 1,000. So just put 1,000, and you haven't charged your tax of 1,000. So here you will write 1,000. What we are doing? We are calculating net profit after tax and interest. So this was your net profit. We have subtracted interest charges, we have subtracted tax, and we have subtracted salaries as well. So it becomes net profit after tax and after interest. Then we need to have our shareholder fund. As usual, you know that shareholder fund is capital plus reserve plus surplus. So let's get back. Here you can see capital is 10,000, reserve is 2,000, profit loss account is 3,000. So it means capital plus reserve plus surplus. Capital is 10,000, 2,000 reserve, and 3,000 is your surplus. Once again I'm checking. Capital 10,000, reserve 2,000, profit loss account 3,000. So in this way we have completed it. Now after putting amounts, we are now ready to solve it. First we will calculate net profit after tax. So it had become 6520. Then shareholder fund, it had become 65,000. After which we are open to calculate it. Net profit after tax 6520 divided by shareholder fund 15,000. So we have got our first answer 0.43. Let's check it out. Okay, return on shareholder fund 43%, and our answer is 43. You want to make it in percentage, just pick it and multiply it with 100. So we have got 43.46. Our answer is 43. So first problem has been sorted out. Return on shareholder fund 43%. Now next is return on capital. For that, just write down return on capital. Again, for this what we need is net profit after tax and interest, and you will be dividing it with. Alright guys, so let me settle down it. So what we need is net profit after tax, and you are going to divide it with capital. Please understand, net profit after tax has already been calculated. As in previous formula, we have used it. Please note it down. Net profit after tax, that was calculated 6520. So we will simply be putting directly 6520, and then we need to have capital. And again, this capital was already been used over here. Capital plus reserve plus surplus. So 10,000 is capital. I'm letting you see it. Look at here. Capital is 10,000. So here you will put 10,000, and if you want to make it in terms of percentage, you will multiply it with 100. Amounts have been posted in the formula. Net profit after tax and interest divided by capital, and then multiply it with 100. So we have got 65.2, and return on capital 65.2% is given. So in this way our second proportion is also sorted out. Now let's see what number 3 is going to be solved. We need net profit ratio. For that we are going to calculate net profit ratio, and for that we need to have again net profit after tax, and we will divide it with sales. So in this way, we'll be able to calculate net profit ratio, net profit after tax and interest, and divided by net sales. All right. So luckily we have already calculated net profit after tax and interest, which is 6520. Its third formula, continuously we are using the same amount, and now we need to divide it with sales. So let's get back to the question and see where sales are provided. Okay, so here you can see in mainstream sales are not given. Look at this line. You are told that total sales 60,000 for 92. So we have got our sales. This is 60,000. Our formula has completed. We were in need to have net profit after tax, and then we need to have sales, and then if you need to multiply it with 100 you can. So let's calculate net profit after tax divided by sales and multiply it with 100. So we have got 10.86. This is our net profit ratio and 10.8, and our answer is 10.8. So in this way net profit ratio is also calculated, and thankfully we have completed our first portion, profitability ratio, where we have calculated return on shareholder fund, return on capital, net profit ratio. We only had to calculate net profit after tax and interest in first formula, and this net profit after tax and interest was used in return on capital, was used in net profit ratio. Alright guys, now we are going to proceed solvency ratio, where we will calculate current ratio. This is our formula number 4, where we will calculate current ratio. And how you will calculate it? You need to have current assets, and then you will divide it with current liabilities. With this we will be able to calculate our current ratio. Okay, so let's get back to the question, and here we have our asset side. We need to get current assets, stock, debtor and cash. These are three current assets, 334. Let's put 3 3 4 current asset again, stock, debtor and cash, 334, and we have completed our current assets. Now we need to calculate our current liabilities. For that we will get back to the question, and here is your liability side. Please note it down. Overdraft, yes. Creditor, yes. Proposed dividend, yes. Provision for taxation, yes. These are 4 current liabilities. But overdraft is not given for first year. When you will be doing it for second year, you will be adding this 2000 as well. So from overdraft to taxation, 4 items are current liabilities. 511. So let's put 5, 1 and 1000. In this way, our calculations has been completed for current assets and current liabilities. First we will calculate sum of current assets, which we have got, and now we will calculate sum of current liabilities. This has also been calculated. Just by dividing current assets to current liabilities, we'll get our answer, 1.42 current ratio. So here current ratio is 1.4. This has been sorted out. After current ratio, this is our number 5th formula. We need to calculate liquid ratio, and for that what we need is we can take this formula as it is over here. Just instead of current asset, what we need is liquid assets and current liabilities. For liquid assets there are 2 methods. One is direct, just do not add stock. As you can see that these are assets, 334 current assets. If we are not including stock, we will have debtors and cash. That means 3 and 4. So here you will put 3000 and 4000. These are your current asset. Current liabilities are already mentioned in previous part. So we are going to take same over here. I'm just letting it down again. Okay guys, we have our liquid assets. At the same time, current liabilities are also mentioned. Liquid ratio is now ready to be calculated. So what we will do, we will take sum of both sides. First we will sum of liquid assets we have got, and now we will take sum of current liabilities. That's also been taken. So 7 over 7, 1 would be the answer of liquid ratio. And here you can see liquid ratio answer is 1. In this way, second part is also sorted out. Solvency ratio, profitability ratio completed. Now solvency for the longer period of time. For that we need debt equity ratio. And here number 6, debt equity ratio. For that first we will apply the simple formula, external debt over internal debt. And if this formula, with this formula, if we are not getting the answer, we will apply second and third. And second formula, as we know, is long-term debt divided by long-term funds. Then we have, let me correct it, and we need to settle down in this way. Okay, long-term debt over long-term fund, this is our third formula. And the second formula which we will use, I'm taking copy from here over here. No, it's not copying. All right, for that we need long-term debts, and it would be divided by shareholder fund. Okay guys, so we have our question here. There are three formulas: external debt over internal debt, long-term debt over long-term fund, long-term debt over shareholder fund. First we will apply external over internal debt. External debt, this is your liability side. Now please note it down. What are those liabilities which would be paid internally? So these above three: capital, reserve and surplus. Shareholder fund, this is internal. Mortgage, payable to outsider. Overdraft, bank outsider. Creditor outsider. Dividend outsider. Taxation outsider. So first three are internal, 10 to 3. Capital, reserve, surplus, this is your internal, that means 10 to 3. So this is your internal liabilities. I'm just making little more space so that 3000 could be visible. Alright, and now we will see external. It is common sense, when these three are internal, remaining everything would be external. So we have 8511. So here we will put 8 5 1 1. So guys, in this way our calculation for external and internal debt has been completed, but I think we need to make more space because denominator is not visible. So here we are going to make all amounts visible with clarity. Yes, now all of the amounts are correctly visible. So here we have our external and internal debts. First step, we will take sum of all external debts, and then we will take sum of all external liabilities, and 15 over 15 mean 1. Let's check it out the answer and we will see whether we need to apply second or third formula. Debt equity ratio. So here debt equity ratio answer is 1. Okay, that's good. And we have got our answer debt equity ratio as 1. It means we do not need to apply these two formulas. We have already solved it. So it means this third formula, long-term debt over shareholder fund, is not needed to be calculated. And here we are going to put a divisor just to write properly. I have done it. Now please note down, first formula was external debt over internal debt, long-term debt over long-term funds, long-term debt over shareholder fund. These were three formulas. We have applied first formula, answer was matched, so there is no need to apply these remaining two formulas. Debt equity number 6 we have completed. Alright guys, so we need fixed asset to shareholder fund. So here our next ratio is fixed asset to shareholder fund. So let's settle down. If you are listening to this formula for the first time, then you need more attention. Fixed asset to shareholder fund. Let me show you again. What you need is solvency long term includes fixed asset to shareholder fund. Formula is very clear. Whatever is written in heading, same elements would be used in formula as well. We need our fixed assets and then you will divide it with shareholder fund, and shareholder fund we have already calculated. So first we will see how many assets are. What we are doing is fixed asset to shareholder fund, and this heading has been used. Now let's see how many fixed assets. Look, by heading it is given fixed asset 20,000 and shareholder fund is 15,000, capital plus reserve plus surplus, so 10, 2, 3 and 20. So here we are going to put fixed assets are 20,000, shareholder fund as usual 10,000, 2,000 and 3,000. In this way our formula inputs are completed. We are just needed to calculate their sum. Just calculating shareholder fund, capital plus reserve plus surplus. So we have found out the sum. Now fixed asset 20,000 divided by shareholder fund 15,000. So we have got 1.3. What we have done, fixed asset to shareholder fund 1.3, fixed asset to shareholder fund 1.3. So guys, in this way our seventh ratio has also been calculated. Now next ratio which we are going to calculate is interest coverage ratio. For that, let's write down our eighth formula, interest coverage ratio. I was telling you that this is the first time we are calculating interest coverage ratio. So why I was saying this question is important, because this is the only question where you will calculate interest coverage ratio. So it means you will have to be very attentive. For interest coverage ratio, what we need is profit before interest and tax, and then you will divide it by interest charges or interest. That's enough. Profit before interest and tax. Let me settle down. This is profit before interest and tax, and then you are needed to divide it with interest amount. This is very interesting to calculate, and you are just requested to please be very attentive. We need to have net profit or profit before interest and tax. Let's get back to the question. So here you can see that this is your profit At this stage, this interest was not charged, this tax was not charged. So it is net profit before interest and tax, but keep it in mind, salaries are or salaries should be subtracted from net profit to get net profit after tax and interest. So there is only one thing, this 1000 was needed to be subtracted from this profit to make it net profit after tax, net profit before tax and interest. So we have 9000, just salaries we are subtracting. With this we will get net profit before tax and interest. Only interest and tax would be subtracted, with which what we will get, net profit after tax and interest. Now note it down what we were needed, interest coverage ratio. For that I am going to highlight this net profit. This was before interest and tax, and in previous formulas what we were in need, it was after tax and interest. So I'm sure that you will be noting it down. In return on capital, it was after tax. Then in first formula, it was net profit after tax and interest. Have you noticed? First formula, return on shareholder fund after. Then second formula, return on capital after. Then in third formula, net profit after. But what we are going to do in interest coverage ratio, we need before. To make it before, we do not need to tackle interest and tax, that is already before, just we are subtracting salaries. And now after this we need to put the amount of interest. Let's get back to the question and see where interest is written. Look at here, interest 480. This is part of our formula. We are needed to put 480 as interest. The formula was net profit before interest and tax divided by interest. Now we are open to have net values. First we will calculate. Now 8000 divided by 480, 8000 is net profit before interest and tax divided by 480. So we have got 16.6 times interest coverage ratio. Interest coverage ratio, that is 16.6. So in this way our answer has been completed for interest coverage ratio. This was number 8. And after that, now we are going to calculate debtor turnover period. This is our usual practice. We have done it for so many times. It was number 9. What we need is debtor turnover period. Let's settle it down. And meanwhile, I'm sure that you people have formula in your mind for debtor turnover period. What we need is average debtors and then divided by net credit sales, and then you can multiply it with 360, 365, 366. First we will multiply it with 360. If there is something not matched with the answers, then we will change it, otherwise you will put 360. First we will see how to have average debtors. Here is your balance sheet. Debtors are provided over here 3000. For first year, no need to calculate average, so we will take 3000 as our debtors, 3000, and then we will see net credit sales. In our question, only sales 60,000 is given. There is nothing else. No gross sales, no return. So it means these 60,000 would be considered as net credit sales. We should write the formula net credit sales. How you will calculate? For that you need gross sales. Then you need to put returns. and then cash sales. With this formula, you were able to calculate net credit sales, but as you can see that only gross sales are given, no return, no cash sales. So here you will put 60,000 and then you will multiply it with 360. Here, since we have written it, let it be placed to little above. Okay. Now here you will multiply it with 360. Alright guys, now on calculator what you will do, 3000 divided by 60,000 and then you will multiply it with 360. So we have got 18 what? Days. So in this way debtor turnover period is sorted out. Debtor turnover period 18. So we have got our answer 18 days. In this way, ninth formula, debtor turnover period is calculated. Now next is total asset turnover ratio. This was also being solved earlier. And formula number 10, fixed asset turnover. This is also needed to be settled down. Let's do it. And formula for fixed asset turnover, let me see if we are going to, yes, total asset turnover. It's not fixed asset, total asset turnover. There are, you can calculate total asset turnover or fixed asset turnover. Okay, for this what you need is cost of goods sold and divided by total asset. So we have got our formula. Again, in your question, only sales are provided. Look at here. You are told that total sale are 60,000. So no cash sales are given. We will indirectly consider this 60,000 as our credit sales. Then we need to divide it with total assets, and total assets are given over here. You can see for first year 30,000. These are your asset. Total is 30,000. So we are just going to put 30,000 over here. So guys, in this way our amounts have been mentioned. We are open to put them on calculator. What is 60,000 divided by total asset 30,000? So it's 2 total asset turnover. So here you can see total asset turnover is 2 and our answer is also 2. In this way our 10th calculation is also completed. Now last, that is capital gearing ratio. Capital gearing ratio is our next target. Again it is requested capital gearing ratio. Why we are doing this question? Because this is the only question which does have several ratios which were not present in previous question. So if you will solve this question clearly, you will be able to solve all other questions as well. So here I'm going to settle it down, capital gearing ratio. Okay guys, so in this way, for capital gearing ratio, you need to have shareholder fund and divided by securities bearing interest. Okay, so here little more space is needed. Let it be shown. Securities bearing interest, shareholder fund. Shareholder fund we have already calculated. That means capital reserve and surplus. You may take it directly, but let's go back to the question. This is your capital 10, reserve 2, and profit 3. So shareholder fund is ready, and here we will put capital 10,000 2,000 and 3,000. Capital reserve and surplus. Then securities bearing interest. For this we will stop for a few seconds and we'll understand what is this securities bearing interest. Any loan upon which you are paying interest. Any loan upon which you are paying interest are securities bearing interest. So let's get back in liability side. Here you can see bank overdraft is not a loan upon which interest is paid. Creditors, dividend, taxation, no, 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 no. Only mortgage. This mortgage is security upon which interest is paid. Please understand, upon 8,000 interest would be charged. So security, mortgage is the only security where interest is paid. So what you will do, you will put 8,000 as mortgage bearing interest. So our values have been posted. We are now open to take sum of these three to get shareholder fund, and secure there is only one securities bearing interest. So shareholder fund divided by securities bearing interest 8,000. So we have got 1.875. Let's check it out. All right, capital gearing ratio 1.9 and we have got 1.875. You may write it 1.9. If you will round it up, it would look like 1.9, but 1.875 if you will write, that is correct as well. So guys, in this way all ratios for first year has been completed. All answers are in front of you and we have solved each and every except this first ratio. This was not included in outline. So we have started from return to shareholder fund and calculated all the ratio till capital gearing ratio. It is requested to please give more attention upon capital gearing ratio, upon interest coverage ratio, and there are few other ratios which you are calculating for the first time. It is requested to memorize them well, practice them well, and practice whole question for 2-3 times. After practicing, if you are feeling anything difficult, you are very open to ask and share your queries, questions or difficulties through messages, text or comments, or you can directly meet as well to share your difficulties. I will try my best to answer your queries instantly. So it's time to end our lecture. Thank you very much for your time. It's time to say goodbye. Allah Hafiz.